Okay, so as you all know by now, like if you were in the live stream, I was live streaming during the news, and during the news I didn't anticipate the market. I was actually talking about the market maker model that I was looking into, or I was trying to teach other people. However, when I came back, or when I finished my live stream, I came back to the chart. I saw the news happened, I saw the move happened when market traded into this 15 minutes fair value gap, which is this one. When market traded into that, you saw the immediate reaction towards the upside. I had few buy side levels marked over there, 3 of them. I don't know why it's showing BSL, it should be buy side. Yep, so you saw the 3 buy side liquidities that I have marked. Now I was not willing to take a trade today, but since the setup that I was seeing around this moment was pretty good to me, I was looking into the 15 minutes fair value and this 1 minute's last fair value. Remember, this is the 1 minute last fair value. It's a huge fair value because of the news, so this should act as a breakaway gap, or market should not fill it up completely. And that fair value, it is a regular fair value. Market should trade it. It can fill it up completely, or it can fill it up partially and then go higher from. However, when I came to my chart, this is where market was. So my first eyes went to the buy side liquidity from where it is reversing, or this retracement happening. This high is sitting in middle of nowhere. Okay, so on the left I have nothing around this area, except for these relative equal lows. I'll just mark a random one so that it can make more sense to you guys. Okay, like somewhat around this. Now, except for those relative equal highs over there, market has taken that one. It has created more relative equal, and as you know, like there are so many buy side still sitting over there on the 15 minutes level. That's why you saw this, because these are the 15 minutes buy side and this is the 1 minute. That's why I didn't had the 1 minute buy side drawn over there. However, this is the new day opening gap that market previously left behind and traded here, just tapped there and continued its lower move for a long time. It didn't revisit that area. So at around this area, when market traded into the 15 minutes fair value, or the only fair value, okay, it created only one fair value after the news, this one. This is the only fair value that market created. When it came inside of that fair value and reacted like that way in 1 minute, I had 2 fair values, and this is the last fair value that I'm marking as a breakaway gap and expecting market to leave some portion open. Now here, to look for a market structure shift, I had to wait until this far, because this is the low, high, lower low. I will explain that in a second. By the meantime, to go there, market needs to go above this fair value and this new day opening gap. So since it's trading lower or below that new day opening gap, I waited until market can go above that level and give me the market structure shift. I got my market structure shift. This is the inversion fair value. Now I was not too confident that market will come back around that area. However, I will just write the FVG and the IFVG, because that fair value failed to hold the price and take the liquidity from low or these areas, and it's now trading above the new day opening gap. So I participated or anticipated a trade from here. A stop loss I put below that inversion fair value gap candle's low. This low was a good area to look for, but even the new day opening gap, but it is what it is. I prefer going with my own analysis, so I just put it below that new, like the inversion fair value gap candles low that covers the new day opening gap, that covers this fair value, that low as well. So I was willing to take that $560 worth of risk, and the target I went for little above 122, which is around 73 or 72 point something. I will share the PNL. So when market gave me that, I waited. If I can get an entry around this area, I'll take the entry, since it already revisited that fair value. Nobody closed below that fair value, this fair value, even this bullish fair value. So this should act as a balanced price range or a strong area of support. So I was not too confident that market will come back here, but I had a order sitting like this way. Okay, so it looked like this. When market filled up with the order right here, look where it tapped. Just the new day opening gap high inside of that inversion fair value. This is where I entered, and that's where I exited with my first entry. Okay, this is where I exited. Now at this area, this is the entry I took in 2 of my accounts, and I got, I think, $1,451 or something in profit after the commission or something. It created new fair value right here, and the very next candle created another fair value right there. Okay, around this area. But you know how I mark my retracement area. So I mark my retracement from this high to this low, because that is the buy side liquidity at the 1 minute time frame. And this one, as you already know that I have marked from 1 minute, I'll just remove this one from this area. Okay, so this fair value's job was to send market up until that far. That's it. This fair value's job, because that is the high market created. This is the fair value market retested. Now if market respecting this, it should take this fair value. Okay, this is what I'm trying to give you guys for a very long time. Your target for this fair value is not that buy side or this buy side or this buy side. Your target for this fair value is this buy side. Based on how market is trading at that level, you can expect higher continuation, or after taking the fair after taking the liquidity reaching into a higher time frame point of interest, it can now reverse, things like that. But what I said, around that area I want to see a fair value gap to give me a strong momentum that market is willing to go higher. I found that fair value right here. Okay, so I will just this is the retracement area, and around that area this is the fair value, but I'm gonna write it as bag because it has created another fair value here. So I know that I'm not willing to enter from this fair value. Why I'm not willing to enter is because I'm expecting a retracement until this far. Okay, why? Because if you know the 1 to 3 move, this is buy side, sell side, another buy side. So up until that far market is balanced. Below that market is now balanced. Above that I have this part as my first one. Okay, so how does that work in the drawing term? So market, this is the move 1, this is the move 2, this is the move 3, up until this far it's balanced. From here whatever it created, this is the new move 1. You are expecting a retracement until that far, then it can continue if there is anything to send price higher. In this case the fair value, that's what I said, that I look for a fair value around that retracement area. This is the retracement area. Now why I didn't enter from here is because if I enter from here, this is a 40 ticks stop loss. Even this, that was not my stop loss, this was my stop loss. So 45, this is $900 worth of a stop loss. I'm not willing to risk anything more than $600 or $750 in a single trade. Okay, that's the max I risk is $600 to $750. So when market was here, based on the stop loss size, I'm not willing to take that entry, and as I said, I'm expecting a retracement here. So my next entry on another account, since I made a good profit on the other account, I didn't consider entering into the same trade from that account. I want to secure that profit, and I switched my account, and that was my stop loss. Although I could have put it a bit higher because this should act as a order block, although it's a propulsion block, but just for the sake of simplicity, this is the order block. Okay, now I will mark the order block level, and I will mark the min threshold level. This is the min threshold and order block level, and as I said, I'm expecting a retracement here, so I entered from this fair value. Look what happens, and I targeted up until this breakaway gap of the last fair value gap low. When market came back, that was the entry I got, okay, inside of that fair value gap. The retracement area, yes, market maybe left a tick open over there, but I don't care about that one tick because I had a fair value sitting little above that area. Market traded into that. So this is the one move, this is the two move. Now I'm expecting the three towards the upside. I got entry from here. This was my stop loss, that is 27 handle. Still it's a huge so it's a huge stop loss because I could have covered the min threshold only and put it somewhat around this, maybe around this area, just there, because it's also covering the fair value gap, it's covering the retracement area, everything is happening. But I don't know why I choose for putting the stop loss during that moment here, because I got very less time to analyze the market. Okay, when market gave me the entry, it was consolidating a little, but eventually that is where I got my take profit hit. Now I had buy side here, I had buy side here. If I targeted until that buy side, then remember I have a new day opening gap sitting right here, although it's a very small one. Inside of that I have this 15 minutes last fair value gap that has the power to send price lower. Keep it simple like that way. Although I got my profit, market came again back inside of that area, and then eventually it went there as well. So this is the other entry that I got from this specific move. Now same thing, guys, you see that high, let me remove the drawing tool, and this one, that high, this was my retracement area. Yes, market gave me a deeper retracement. That high up until the body level, this is where I was expecting a retracement. It has created a huge fair value gap. From here market went higher and tapped into that. I don't know what happened now because I started recording. Yeah, so it has taken that liquidity because it cleared or created a equal. Now look at that new day here, new day here. Okay, this small little thing will help you a lot. Usually I don't keep this small of a new day opening gap, but since it was there the day I draw, it's been there. I don't know like how many of them are there. See, like new week opening gap, buy side liquidity, things like that. I have so many levels in my chart, the chart I usually trade from. So that is the thing. Now here, as you are seeing, like that level, when market broke above, this 15 minutes fair value turned into a support area. At the same time the new day opening gap. This is how market is reacting for now. I don't know if market will like hold here or market will go lower, take this liquidity, then again continue, because in 15 minutes it has now created, I think, new fair value gaps if I'm not wrong. Yeah, so I have few fair values, like a fair value around this area. This one I'm not counting as a fair value since the wick is covering all the way up to that level, so I'm not covering that fair value. This is a proper fair value gap that market can retrace and then again continue, or since it's already PM session, nearly 4 PM, market can easily go for a small consolidation and a retracement to create the wick of the daily candle. Okay, so think this way. This is the daily candle. Market is currently sitting around this level. It went up until that far, it's sitting here. So this is the body, like whatever, this is the body, let's say. So it has whatever wick it has created on the lower, this will be the wick of the low, and from where the 5 PM candle close, the upper wick will be created that area. So I don't know if market is willing to go higher and take these buy sides and trade until that new wick opening gap or not. However, like this new wick opening gap, by new, don't be confused, like this new means when a new wick starts, that was the opening gap. but this gap is not a new, like this week's opening gap. This week's opening gap is sitting right here from where market gave you that crazy move. That is a very old new week opening gap, but that old one you have to keep for at least 4 to 6 weeks on your chart. Okay, like a minimum a month or two you can keep it. However, as I said, and that 15 minutes fair value is sitting around this area, so these liquidities should be taken, as I believe market will take those liquidities. Okay, so yeah, I mean, it's a short video that I'm willing to share with you guys. 2 entries, I took one from here, one from this area, this fair value, and the reason I took from here and not from that small little one is because of the stop loss size and the retracement that I'm expecting will happen around that area. That's why. Okay, so I hope that part is clear. And yeah, I'm coming back with more videos. I'm coming back with the market maker model. I don't know like how much you guys will be able to grab from the videos, but if you practice, if you focus properly during while you are watching the video, I believe that you will get a pretty good amount of success or knowledge that you can literally implement in your trading. Whatever style you are trading right now, if you can add those simple things 1 or 2 steps out of that, it will give you more confidence, more confirmations, and it will reduce your losing trades by a ton. Okay, so that area why I want to see market retracing here and then going higher is because of that 1 to 3 move. Same thing like this area, it went for a deeper retracement. Look at the rejection or the reaction. It's not rejection, it's reaction. Look at the reaction you are getting around that. Why? Because regular support resistance trader, they are looking into that area as a resistance. When market broke above that, or when market again broke above that, it should now act as a support. It's giving you some sort of reaction from there, but since we are not support resistance trader, we are looking into from where it is coming out. It took some liquidity, it's trading this fair value gap. Now it's giving you a market structure shift with another fair value gap on the 1 minute time frame. So maybe this fair value is the area from where you can look for a entry until these lows. It's a very good area as well. Like, don't get me wrong, if your entry looks something like this is even that low is giving you 38 handle, but the stop loss is 23.25, which is nearly $465. If your risk management supports or suggests that, you can go for this sort of entry. If not, wait until you get a better setup. And since market is bullish, I would let the market do its sell side job. I will look for buy longs, as simple as that. Okay, like yesterday here, see what happened here. Market went down, I didn't look for a sell short. When market reacted from that midpoint of the new week opening gap on the 15 minutes, it was very clean. Market gave me this. Okay, like look here, this is your liquidity grab. Yes, I know it's just by a tick or it's a very shallow run, but at this area I had more added confirmation from ES. Let me show you the ES at that area. You see this low on ES is here. I don't know if you guys are able to see or not, but let me zoom in. It has created a lower low on the NQ. On the ES, it has created a higher low. So this is your SMT divergence. What is the time? Between 10 to 11, the silver bullet. This is your silver bullet time where you are looking for an entry. Now on the 15 minutes chart, I had this order block plus FVG. I looked into that as my entry point. Now from here, if you are entering, this was the last fair value above, like below that high. When market broke above that, you could look for an entry here, although market didn't revisited that, so it came very close to that level. That was one way of entering into a trade. I entered from the 15 minutes fair value based on my 15 minutes chart analysis, which was during this move, and you could have entered from this fair value, keeping in mind that this will act as a order block, or it's usually a propulsion block, but I will consider order block. Okay, actually that is the order block because it's trading the previous order block as well. So this is OB and this is your mean threshold MT. Market came until that order block, then started going higher, but I was already in a trade based on my 15 minutes analysis from that area, and my stop loss was somewhat around this because of the 15 minutes order block mean threshold, and targeted all the way up to that new week opening gap, that liquidity. Okay, this was the entry here from yesterday, and I took a partial at this level because there was a 15 minutes fair value as well sitting around that area. If I'm not wrong, I took a partial at around this area because it's a very good area to take partial. 2.69, usually I look for 1 to 2, but at this buy side level I took a partial. Okay, like partial, yes, it will sometimes reduce your profit, but it will every time reduce your loss every time. Why I said sometimes it will reduce, because you see, after trading that liquidity level, market started to retrace. But if the 15 minutes fair value, like this sort of fair value, was sitting around that level, market could easily reverse from there. So if you take the partial, put your stop loss to break even, or maybe a tick or two above the break even, so that it can cover your commission as well. This is 86.75 handle. If you take a partial here, this itself is giving you nearly $1,735. This is $1,735 worth of profit, and you are leaving the rest runner without any risk. There is no risk. So if market comes lower, it stops you out, you will be still in that $1,700 profit. Okay, and you will lose nothing from here. But if you don't take partial, hold your trade until that far, it worked here. But if it reversed from that buy side liquidity, you are losing all of your profit at the same time. Now it's coming lower to stop you out. Like what could have done, like what could have the market done if it reversed from here? It could take these liquidities, maybe if you're lucky from this fair value, it could again start to move higher. Or if these are the liquidities, this is, remember, this is the only 15 minutes fair value you had that can stop the price. Market stopped over there at this time, but the next time this fair value's job was to send price higher from where it is retracing. That was the high, this was the high. If it fails to go to that level, it will fail, this fair value will fail to hold the price for the next time. So the next time when market comes below this fair value, these are the lows, that is the market's target. Even if your stop loss is here, it will get hit. Even if it's here, it will get hit, because this time that is the target for the market of this fair value. This fair value was created when market was retesting or reversing from this level. So when market trades below that fair value, that will be the next target for the market, if not the lower sell side. I had so many sell side, and see all this sell side, and these higher time frame point of interest that I had drawn on my chart for a long time. Okay, so that's the reason I always take partial, no matter what, and that's the reason I have like too much of winning trades. I share so many of my winning trades. I have very less loss. That's why I don't have too much to share with you guys. I will share with you some of the screenshots right now. So let me, this is one entry, that's the profit that you can see on the top, which is 1450 on 60. That was one entry. The other entry is from here today. Okay, it's 1431.60. so 2 entries, quick in, quick out. This one quick in, quick out. Within like 3 minutes or 4 minutes I got my profit. Okay, like the first entry, look how long did it took. This candle gave me the entry 1 2 3 within 3 minutes. That's 1451 lots, $1451. I don't really care what market does after that. Okay, I really don't care. Here, see how long it took. Yes, there was a small consolidation, so it took little while, like little more than what I expected. But how long? 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 minutes, $1431 as my profit. So I don't really care what market does, and after my profit, I'm not willing to take any more trades. I'm not willing to do anything on the chart right now. So yeah, I hope the video was insightful. The reason I took the entry and the reason I waited, everything, you got everything out of it. If you can figure that out, you will find your upcoming trades or setups working even better. Okay, so until next time, take a very good care of yourself, your health, and your loved one. Bye bye.